Hello, Jimmy here, and this is Team 6's FinTech presentation this week. I'm going to give you a little bit of an overview and then also go into the organizational impact. So FinTech from a very high level is basically just integration of technology into financial services, and hopefully throughout the course of this you'll improve customer and business transactions. FinTech has historically really focused on the consumer retail sector, and which really fueled its growth across the world with just various business to customer solutions, and really just trying to keep up with the pace of the world and just meet the financial needs of the consumers. And while business to business has really just been overshadowed by the business to consumer aspect of FinTech, it has been gaining traction over the last several years. And we're starting to see this with cross-border payment systems, and where you're starting to see some new companies emerge and also some new technologies. And an example of this would be a distributed ledger technology, or also blockchain, which is really causing FinTech to be a part of the discussion in boardrooms, because leadership is starting to see the importance of having these seamless payment systems for their customers, and also the integrations between each other. There are several key drivers that go along with FinTech, and the first of those is digitalization. Over the past 10 years, 49% of consumers conduct their banking primarily on their desktop or smartphone. This is causing companies to look for ways to move away from paper and digitize their processes. Another piece of this is also just the regulation changes go along with it. So these processes are causing a big need for regulation changes, because everything's just more interconnected through APIs, and they have to make sure that things are secured appropriately. Customers are expecting an easy experience. That's what everybody's become accustomed to. So corporations must become agile, integrated, efficient, transparent, and secure, and make sure they have a seamless payment solution. And then finally, realizing the benefits of this is just where companies have learned that working together to enhance their integrations can really expand what their capabilities are. And I think many of them are learning that co-opetition can be a great thing between themselves. Some people see change as disruptive, and many have labeled FinTech as disruptive, but it's really not. Yeah, there has been some changes to market norms, but they have not been disruptive in the sense that they've created new markets or new ecosystems to displace anything that was already standing with different firms or products or any type of partnership. So really, FinTech should not be considered disruptive, but it's more of a change agent that's trying to change things for the better. Along with all those changes, it's had an impact on the customer journeys. They've actually had a considerable impact on those, and it's starting to become a new norm that customers expect, and companies must meet that if they want to stay competitive. Companies really have to focus on improving the customer experience, which could lead to them increasing their revenues, and it's also put them in a situation to potentially decrease their personnel costs, because depending on what they're trying to sell or produce and the route that they take customers through could make it easier and involve less people to make the same things happen. Along with this, you're also starting to see companies and regulators really establish some collaborations, kind of like what we talked about earlier, of just realizing the benefits of working together. But they're setting these up in what they call FinTech bridges, and this is really helping them to reduce barriers and foster information, and also share information between each other in their respective markets. So FinTech is truly a concept that can benefit everyone, from the companies, the regulators, and the consumers, if everyone will just work together.
So my name's Jeremy Brill. I'll be doing the next two slides around current development and efficiencies and predictions for the next iteration of FinTech. So to start with, anybody that's used online banking to originate, say, a new mortgage or a new car loan, probably become familiar with the digital signature practice. So digital signatures have been pretty well adopted across the board. This obviously is a great gain in efficiency for the financial institutions, instead of having to actually have paper signatures and all the time that goes back and forth. And if you remember in original transactions, they might allow you to do a digital signature, but then you'd later have to sign the real one, and typically that's not the case anymore. It's certainly becoming much less common. Another big efficiency they've created is ACH. So this is the automated clearinghouse. So manual checks go to a clearinghouse in the United States, and there's actually a couple of them, and banks basically trade checks back and forth that are written to or from each other. That process to some extent has been automated, and when using the automated version, you can do digital transactions, and that's referred to ACH. Again, pretty well established now. It's generated a lot of efficiencies, getting away from the paper check transactions. Many of you may have used this, say, for example, for funding your earnest money for purchasing a house. And the third current that I'd like to talk about a little bit is the cloud migration. So fintechs were some of the first to gain the efficiencies in the cloud. I know Wells Fargo built a private cloud at the beginning when they were unsure of how public clouds were going to work with the regulatory. This was built on technologies such as Chef or I forget the other one that they used. Anyways, so they built originally private clouds to be able to have SaaS platforms out there available. That has switched, and they've largely moved now to public clouds, which is obviously saving them a great deal of money when they're doing it correctly, over maintaining their existing physical data centers. The next slide is around predictions for the next iteration. So what is FinTech going to do in the future? One really interesting one is the adoption of online notary services. So more and more, when you have to have something notarized, they're enabling this via webcam, basically, so that it can actually be done face-to-face, but over the internet. So the notary can still validate that you're actually signing the documents yourself, that you agree with that signature. So I find that kind of fascinating. It's a little bit kludgy, a little bit clunky, but I'm sure they'll find ways to streamline that in the future. Another interesting one is QR codes for transfers and payments. So a lot of you have probably gone to restaurants where you've got, say, a QR code for your menus that could easily be expanded upon to enable payment of your bill as well. You're probably still paying with a credit card, or maybe tapping your phone for Apple Pay or something like that when you leave. You could also theoretically use those same QR codes for digital transfer for payment of your restaurant bill, as an example. Everybody's heard of blockchain, digital currencies. There's a lot of fluidity around blockchain right now. Up, down, up, down. I don't know what's going to happen there, but I can't imagine we'll ever get away from digital currencies entirely going forward. So especially with some of the smaller nations actually choosing those as their national currencies. So the facilitation of digital currencies with major fintechs, those transfers back and forth, just like transfers between international currencies, is a future concern for FinTech.
Good day everyone, my name is Cesar and I'm here to present the opportunities for academic research on FinTech. As discussed in the previous topics, AI has definitely penetrated all industries, including the financial industry. According to McKinsey, AI is expected to generate 1 trillion in additional value for the financial sector. This eye-popping value alone is enough to incentivize current and future researchers on AI applications in FinTech. AI research in FinTech is varied in its focus. For example, there is an impetus to improve AI models that can predict and classify performance and customer behavior. Included in this section is the research on preventing data overfitting and false discovery. Other research areas include AI-assisted information dissemination and pricing, reasoning, and behavior. AI in finance is also being touted to help preserve privacy and security. AI utilization for fraud detection will continue to proliferate as more researchers develop new techniques. Researchers and developers will continue to produce customer-facing applications such as personalized services and robo-advising. Cloud computing will be the new norm. According to a report, by 2030, cloud technology will be the dominant service. Thus, it is not surprising that the research will also focus on the area. Among these research underpinnings are optimization of cloud services and how to leverage cloud's power to produce this value. As institutions transfer to cloud, cyber risks also increase. Hence, further research is needed on how to improve security in the cloud era. New technology in financial cloud services also needs exploring. These areas include edge computing, incorporating 5G to the cloud environment, IoT impact on the cloud, and the rise of cloud-based microservice architecture. Blockchain is considered a game changer in finance as it can decentralize the financial industry, doing away with the intermediaries such as banks. For example, it can be used to approve loans automatically without an assessor. Blockchain as a database can be used to promote reliable information sharing, resist tampering, emphasize traceability, and preserve the integrity of information. In finance, blockchain is also expected to automate monitoring and increase trust between entities. Blockchain, of course, in the field of finance is more than just a database, as it is also related to cryptocurrencies, another topic that is still controversial to this very day. Research in these areas can be in the policy regulation, the impact of blockchain on purchasing operations, how cross-chain operations behave and their implications, and how blockchain can contribute to realizing an economic system that is more value-driven than cost-driven. FinTech has also significantly changed the payment system. Nowadays, different payment methods include digital wallets, cryptocurrencies, and other digital payment gateways. Banks are becoming just an option rather than a necessity. Bill Gates' prediction that banks will eventually be out of favor is becoming a reality. Big companies such as Google, Microsoft, and Amazon are now encroaching on the once exclusive area of financial institutions. For example, Apple now has its own credit card, Google has consumer bank accounts, and Facebook introduced its own digital currency called Libra. In the lending field, FinTech has ushered the rise of peer-to-peer lending. Young entrepreneurs have more options now to finance their startups. Some of these options are crowding and initial coin offering. Even the area of market trading is getting revamped. What FinTech experts call high-frequency trading, or HFT. HFT uses powerful algorithms to analyze market data and execute orders based on certain parameters. Personalization of financial tools has introduced new systems that can help an individual manage their wealth without hiring a financial advisor. These new systems integrate AI in giving advice. An example of this is the robo-advisors mentioned in the previous number. Some interesting research topics in these sections are effectiveness of the high-frequency trade, adoption of game theory in trading, behavioral analysis of market, comparative analysis of different types of crowdfunding, the effect of re-intermediation in which the platform plays a vital role in the transaction. In the world of software engineering, DevOps is proving to be the new trend that focuses on end-to-end automation. The same drive can be seen in the financial industry. Hyperautomation is built on the combination of complementary technology that allows end-to-end process automation. Hyperautomation can be used to automate accounting services, financial recording, and reporting. An area of research in this section would be the sociological impact of such a movement. After all, it is expected that hyperautomation will make human workers obsolete.